basically in a lifetime of investing, if you ended up finding just 2 or 3 or 4 baggers at the age that you're at right now, that's all you need. In many cases, if you just found one, that might be all you need. As value investors, we have to also have a good dose of skepticism in how we approach these things. So we can't always assume that everything's going to go to the moon in terms of size and growth. And the nature of capitalism is that there will be a lot of competition that will try to go up against those moats. But I think that if there's a quote from the Upanishads which goes something like this: "As is your wish, so is your will. As is your will, so is your deed. And as is your deed, so is your destiny." And then kind of the punchline is your deepest desire is your destiny. So going back, to what I started with, if you said, I want to focus on 50-cent dollar bills, and that's your deepest desire, you will find those. If you say, I want 20-cent dollar bills, you will find those too. If you say that I only want to invest in businesses that can go up 100 times in value in 10, 20, 30 years, you can find those too. So it's a matter of what you choose to focus on. And as long as you're willing to put in the work to sift through company after company, with the framework that you're interested in. So in the case of the multibagger framework, there are just 3 things that matter. And then the fourth is the price, obviously. So if a business doesn't generate high returns on equity, you're done. You don't need to spend any time on that. If the business needs a lot of debt to grow and generate high returns on equity, you could also be done. You don't even need those. If management quality or ethics is a question, you're also done. You don't need those either. And so just if you look at the businesses that generate high returns on equity, that alone would wipe out large swaths of businesses. And then, you get to the runway, right? So DMart will be a lot larger in 10 or 15 years than it is today. I think that's a pretty easy bet to make. That statistically, I think the odds are high that something like DMart might do well. We could make that statement about private sector banks in India. Private sector banks in India might be like a third of the banking pie in India today. And maybe in 10 or 20 years, it might be half or 2/3 of the pie, for example. And the pie itself will have grown. So there are things that we could hang our hat on and then kind of take it from there. So basically, I think that if you go down this path, which is the multi-bagger path, the interesting thing is that and all value investing, there are a couple of data points. John Templeton used to say that the very best value investor or analyst will be wrong 1 out of 3 times. Like 33% error rate is the lowest error rate for the very best practitioner of the art. If you were a kind of brain surgeon and you had even a 3% error rate, there might not be too many people coming to you for brain surgery. But I think in terms of value investing, you could be wrong half the time. And I think I've probably been wrong close to half the time and still end up with a phenomenal track record. So, and especially if you focus on the multi-baggers, companies that would go up 10x or 100x, basically in a lifetime of investing, if you ended up finding just 2 or 3 or 4 baggers at the age that you're at right now, that's all you need. In many cases, if you just found one, that might be all you need. And so we have all this time. And on the other end, we just need to find things just once. Don't even need to find them that many times.